People thought the crash we had in 2008 was what I was writing about. No, I predicted that crash. That was part of it, but it wasn't what I really was worried about. What I really was worried about is what hasn't even happened yet. The problem was the government had unleashed this massive inflation tsunami. I just didn't know, when it was going to hit. I thought it would have hit sooner, but they did QE1, QE2, QE3. They printed all this money. We had massive budget deficits. We created a mountain of inflation. But nobody cared about the inflation because all they did is look at the CPI and they said, well, it's not going up more than 2%. And part of the reason for that was the way they rigged the numbers. It really was going up more than 2%, but it wasn't going up 10%. Maybe it was going up 4 or 5%, but they could fudge it enough to make it look like it was going up less than 2%. But after we kicked the, monetary, heroin into a massive overdose after COVID, right? We just went crazy with the money printing, and we sent everybody home and had people not work. I mean, that really brought everything to a head. And so now we're experiencing the consequence of the inflation I've been warning about for more than a decade. And this is just the tip of the iceberg. It's going to get a lot worse. The 8%, 8.5% year-over-year inflation that we've seen is going to go much higher. The Fed is not going to be able to fight inflation. It spent the last 10 years or more creating inflation. And there's no way they're going to get rid of it, not unless they're willing to allow a much worse financial crisis than the one we had in 2008. Not unless they're willing to allow a far greater recession than the Great Recession we had in 2008, 2009. And in order for us to get rid of inflation, the government is going to have to get rid of the budget deficits because they've been paid for with inflation. So we have to have massive cuts to government spending and maybe big increases in taxes, not on the rich, but on the middle class. On average, Americans are going to have to pay much higher taxes because government has been paid for through inflation. And if we're going to find another way to pay for government other than inflation, well, then it's going to have to be another form of taxation. And so I don't really see the Federal Reserve having the guts to stick to the inflation fight. I don't see the U.S. government, having the integrity to make the type of spending cuts or tax increases that would be necessary. So we're just going to have inflation. And the markets don't understand that, but we're going to have double-digit inflation as a way of life in America. It's just going to continue for year after year after year. And there's really no relief in sight. And then I do think at some point, the bond market's going to collapse. We'll have a sovereign debt crisis and a currency crisis as our creditors realize that the dollar's a bottomless pit. But, in the short run, we had this big sucker rally in the dollar. Maybe it just ended. We're having a big update. Gold's up, $30, $35 today. Silver's up $1.50. So we're starting to see people question the Fed's resolve in fighting inflation now that we saw the Bank of England pivot. And now we're looking at potential bailouts of UBS in Switzerland. And some investors are starting to think, wait a minute, if the British couldn't handle it, if some European banks are going to fail with higher rates, what about American banks? We're not immune to this, and we're not. I mean, if the Fed raises interest rates the way it's claiming, everything is going to implode. And now people are realizing that the Fed may not allow that to happen, and so the dollar is going to implode instead. Yeah, well, when you see the dollar roll over, remember, we've had these big increases in consumer prices with a huge increase in the value of the dollar relative to the euro and yen and other currencies. And so that's really mitigated how much prices have gone up. And so when the dollar reverses, that's going to push prices up much higher. So the temporary drop we saw in oil prices, that's going to reverse. Other prices that pulled back when the dollar was strong are going to rise when the dollar weakens. Because remember, the strength of the dollar was based on the false perception that the Fed could actually win a fight against inflation and was prepared to do what it took to win that fight. But of course, the people who thought the Fed was going to beat inflation are the same people that thought there was no inflation. They said inflation wasn't a problem, and then they said it was transitory, and then they said, oh, don't worry, the Fed's going to fix it with a few rate hikes. it's not going to work. The rate hikes won't be effective because they're not enough. The Fed has to get interest rates above the rate of inflation. And so if inflation is 8%, they got to go to 10%. They have no chance of getting anywhere near 10%. They won't even get to 5. They probably won't even get to 4 without a collapse. And you also have to have the big cuts to government spending. And right now, government is increasing spending. Nobody is talking about reducing government spending. All they're talking about is new ways to spend more money, and that creates even more inflation. And so, yes, we got a little bit of a dip because, nothing goes in a straight line. Everything ebbs and flows. So we'll have a little bit of a pullback in the headline inflation numbers, and maybe some people will be lulled into a false sense of confidence. But then inflation is going to take off again. I mean, think about how many times last year they kept saying peak inflation, peak inflation. Every time, it went down a little bit, they were celebrating that it was over. And then, of course, then we'd have a new number and make a new high. But we're nowhere near the peak. We're near the trough. That's how bad this is, right? It already happened in the UK. I mean, you saw what happened with the pension funds that were heavily levered in the bond market and were exposed. U.S. pension funds, insurance companies, everybody has levered bond portfolios. But the whole country is exposed here. The whole country has been living off of cheap money. That's been the secret to this phony recovery, has been debt and inflation. We've built an entire economy based on debt and inflation. Now the inflation is the problem, and you can't just, turn that off. You can't have a foundation of debt and inflation and then build a whole phony economy on top of it, and then take away the debt and inflation and not expect the whole thing to come crashing down. It can't levitate in midair. And think about all of the companies that have been financed with debt that would have gone out of business years ago or never would have started up, but for the flow of cheap money coming out of the Federal Reserve. You take that away and, everything implodes, and, the jobs go along with it. But we've had tremendous malinvestments over the last decade or more when interest rates have been artificially low. We haven't saved enough. We haven't invested enough in real plant and equipment. All we've done is spent borrowed money, and we've speculated. We've funded all kinds of crazy ideas. One of them, unfortunately, is what you're into, in cryptocurrencies and Bitcoin. I mean, all this stuff is malinvestment. All these companies that are in the crypto space, they're all going bankrupt. You just told me you're headed out to Europe. You're going to all these conferences. You're going to conferences. All of this is a complete malinvestment. All of it is going to implode. It is all nothing. It is all part of the bubble. There's all kinds of tech companies too that are going to be imploding because we weren't doing what we were supposed to do, thanks to the Fed and other central banks and governments. The whole economy is screwed up. And when you start to raise interest rates, all of that becomes apparent. You start to see all the problems. It's, the hangover from all the drugs. But, the Fed does not have the stomach for that. Just like they bailed everybody out in 2008, just like they did it again in 2020. They're going to do it again, whether it's 2022 or 2023. But this time it won't work.